Hi, my name is Shane Campbell, and today I'm going to be giving you a tutorial on how to complete the budget scenario in Concordia University's Financial Literacy 100 class. All the scenarios are different, therefore the scenario that I am presenting in front of you today will not be the same as the one that you possibly get. Although what I do hope to provide you with is an outstanding tutorial that shows you where to plug the numbers in so that you too can be successful in this class. For starters, go ahead and download the Excel budgeting tool along with your budgeting scenario. In this case, mine would be Alexander's budget scenario. After that, I find it easiest to split my screen to the right. That way I can see Alexander's budget as well as the budgeting tool that I'll be using to figure out the total budget. Then we will complete what Alexander budgeted. So it says it is May 31st and Alexander wants to budget for June. He works part-time at a grocery store and part-time at a restaurant. The net monthly income from his first job is $500 and the net monthly income for his second job is $700. Therefore, we know that his total salary and wages budgeted is $1,200 because $500 plus $700 is $1,200. So we put that into the budget. Then we go through his planned expenses. So he is planning on spending $120 for his home congregation, which would be home church and tithing. He's planning on spending $250 for rent. Along with that, he's planning on spending $150 for his car. So in this case, I put this under other because there is no set car payment category. He's planning on paying $140 for his car insurance, so auto insurance is $140. He's planning on paying $70 for his mobile phone plan, so we go ahead and find cell phone, put $70 in that box. He's planning on spending $120 for college savings, so that would be transfer to a college fund, $120. Along with that, he's planning on spending $160 for food, so we go up here and we find food, put down $160. He's planning on spending $70 for fuel and oil. He's planning on spending $10 for clothes, so we go down here, clothing, $10. He's planning on spending $80 for entertainment, so we go ahead and find entertainment. And I put this in the other category just because it's kind of generalized, and to me, other means generalized. So I go ahead and I'll put this in the other category. He's planning on spending $20 for personal items. So we go ahead and we go down here to personal, and this is another thing. I'll put this in other because it's general. And then he's planning on spending $20 for his summer league sports team. So that's right up here. And I do this team dues and related expenses. So $20 there. And then it says that on May 31st, Alexander has $640 combined cash in his wallet plus what he has in his checking account. So we go ahead and we go down here and we understand that he had a starting balance of $640. Okay. Now we go through how his month actually went, and we'll enter these numbers in the actual column. We just entered those numbers in the budget column right here, and now we're going to enter his actual numbers in. So it says that Alexander made everything he budgeted plus $50 in overtime pay. So he made $1,200 and then plus $50. So he actually made $1,250, which is more than what he had originally budgeted. But he gave 10% of his income, or $125, to his home congregation. So this would be more than he had originally budgeted for. His rent was $250, which is equal to what he originally started with. His monthly car payment was $150, which is the same as what he had budgeted. Remember, we put car payment and other because it was general. His monthly car insurance premium as of this month went up to $155. So he actually paid more than what he had budgeted there. His mobile cell phone plan was $70. That is what he had budgeted to that. Along with that, he spent $190 on food, and that was a lot more than he had budgeted, $30 more to be exact. He spent $65 for fuel and oil, so he budgeted for more and spent less. He spent $215 for car repairs. This is something that Alexander did not budget for and is definitely going to take a toll on him later. Along with that, he spent $80 for a new pair of running shoes. So I'll put this under personal, and then I put this specific one under the manicures, pedicures, spas, tanning, only because they don't have an area for a new pair of shoes. So I just kind of make my own category here, and you can do the same, or you could relabel it. It's completely and entirely up to you. He spent $70 for entertainment. So we go up here to entertainment, and we'd put that in the other category because it was general. So 70 for entertainment, 20 for personal items. So we put that in the other category as well because it was general. He spent $37 for a birthday gift for his mother. He did not budget for that, so he would be $37 over what he had budgeted for. And then he spent $20 for his summer league sports team, which is exactly what he had budgeted. And then Alexander got a speeding ticket for $190, something he did not budget for. And I like to put this under parking and tolls just because tolls reminds me of fines, something of that nature. So I'll go ahead and put that there. Now after you have all of the values both entered in your budget and actual column, we'll go back to the question 1. It says, what is Alexander's projected budgeted ending balance for June? So what is he projected to end with budget-wise? So his budget says that his ending balance should be $630. So we'll go over here and make sure to include the dollar sign, and we'll put in $630. The next question then says, how much did his actual cash outflows exceed his budgeted cash outflows by? So in other words, find the actual over-under budget column and look in the total cash outflows row. What is the value in that cell? So we go up here and we find the actual over-under budget, and then we've look for total cash outflows, and it looks like his actual cash outflows exceeded his budgeted cash outflows by $427. So we go ahead and put $427. And now we look at this. Which of the following is true? The budgeted cash outflows exceed the inflows. So do the budgeted outflows exceed the inflows? Yes, they do. The budgeted cash outflows are less than the inflows. Well, that obviously cannot be true. And the budgeted cash outflows are equal to the inflows. In this case, they have $10 in difference. So our answer would be the budgeted cash outflows exceed the inflows. For question 3, we are asked to scan the following list which matches the categories in the budgeting tool. In which of the following areas did Alexander have greater outflows than his budget? So we start off with A. Did he give more than what he had budgeted? Let's go ahead and take a look. Yes, he did give more than he budgeted. So now we know that it can only be B, C, or E. Next we'll go to B and see if he spent more on his home or apartment. And it appears he did not. So we know that we can rule out B. So now we know that A is correct. Let's go ahead and check if C is correct, daily living. And yes, he did spend more there. So both of these are still in play. D would be transportation. Did he spend more on transportation? And we know he definitely did there because he got that huge $190 fine right there. So then we go back and we know that both C and E are still in play, and then we go see if he spent more on education. So we go down here to education, and it looks like he didn't spend more on education. Did he possibly spend more on personal or family? And it looks like he did, as he bought a new pair of running shoes as well as bought a gift for his mom. So now we know that A, C, D, and K are all correct, as he spent more giving, he spent more daily living, he spent more transportation, and he spent more personal/family. So now we're going to scan the following list, which matches the categories in the budgeting tool. And which of the following categories did Alexander have cash outflows less than what he budgeted? So for starters, we're going to start with entertainment. Let's go ahead and look at the entertainment column. And it looks like he did have less in entertainment. So we know that E is correct. So that means it either has to be C, D, or E. So now we're going to look at A and see if he spent more giving, or spent less giving, excuse me. And he didn't spend less giving, so we know that D and E are out of play. So then we're going to go ahead and double check and see if he spent less on his financial goals and obligations. And in this case he did, as he did not put the $120 towards the college savings fund. So now we understand that E and L are the answers. Now question 5 says this. Alexander recognizes the problems in his June budget, so he commits himself to getting on top of this right away. He works on his July budget. starting with the same budgeted values as for June, except for the following adjustments. So a lot of guys will go ahead and make a completely different budget for July. Instead, what I'm going to do is I'm going to go ahead and just change the numbers of my budgeted column for June. So first off, we have to start with this. All of the budgeted values are the same for June, so we know that, except for the following. So we'll go ahead and change the following. Auto insurance budget is increased the actual amount spent last month, recognizing he has little control over that in the short-term value. So we go down to auto insurance and we see that last month he actually spent $155. So we're going to change the budget to $155. Then we'll go back and it says car repairs are unpredictable, but Alexander thinks they will average 50 per month. So his budgeted amount for July is 50. Now we understand that he wants to put 50 towards car repairs, which is smart because sometimes freaky things happen and there's no control over that. Entertainment budget will be cut from 80 to 10 by just going to parks or cycling with friends, generally watching older DVDs from all of their combined collections and etc. So we're going to go down here to entertainment and we're going to change this 80 to a 10. Alexander's only going to spend 10 on entertainment. Team dues budget will be cut to 0. The league was fun, but Alexander figures he can join a church league for free. So we'll go ahead and go down to the 20, and we're just going to go ahead and put 0 in this column because he's no longer going to do that league. And then the gift budgets will go up from 0 to 10. Birthdays don't happen every month, but Alexander figures he can plan ahead and watch for sales so that he is not shopping at the last minute. So this time we're going to change the gift budget, which was previously 0, and we're going to go ahead and put $10 into that budget so that Alexander can budget correctly. So now that we've entered these budgets in our July column, the question is, for July, what do Alexander's planned inflows exceed his planned outflows by? In other words, for July, what is the cash inflows over short of cash outflows? So we're going to go down here, and it looks like his inflows exceed his outflows by $5. That's this column right there, and that's the new budget. That's the new budget. So now we will have $5. So his cash inflows over short of the cash outflows will be $5. So in this column right here, we're going to go ahead and enter $5 and review over your worksheet. Make sure that you have answered every question so that you do not miss any points that you should have got. And now that we've done that, we're going to go ahead and save and submit and hit OK. And then now we're going to hit OK and review our results. And it looks like we got 5 out of 5 points, which means we got everything correct. So that is how you complete the Financial Literacy 100 at Concordia University. As I previously said, all scenarios are different, but this will help you in guiding you along the way.